Hi, this is Paul with your Bold Profits Daily. Today, I am going to give you a great update on my 3 predictions that I had for you at the beginning of this year. And if you go back and watch the video, you'll see that I told you that I believed that interest rates were going to go down. And if you think back to what was going on, at the time, everyone was thinking that interest rates were going to keep going up and going up. And interest rates have gone down. In fact, they've gone down a lot. For example, if you were planning to buy a house when I first made that video, you would have paid 5% for a 30-year mortgage. And today that rate is 4%. And that's because the rate for the bond that really sets interest rates for mortgages, car loans, for so many things, the 10-year bond, the interest rate for that has gone down. And because of that, the price of the bond has gone up. And if you remember, I told you to buy the IEF ETF, and it's gone up about by 3 or 4%, which for bonds is really, really good. And I'm doing this update because I want to tell you that I think that with the size of the move, again, once for bonds, a 3 or 4% move in a few months is a big deal. So for the size of the move, the speed of the move that we've had, I believe that that particular prediction has come true, and it's time to close that trade out. And so if you were in IEF and expecting interest rates to go down some more, it could go down a little bit more. However, that trade is done because right now we've got all these recession fears, which I really consider to be pretty bogus. Because just today, for example, when I'm recording this, and I'm doing this about a week early because my team is going to be away, the United States reported that its economy grew by 2.2%, and there's really no sign that there is a recession coming, there is a financial crisis coming, or that there is a bear market coming. What we do have is a lot of fear, and that's now been priced in by people buying bonds. It's now been priced in by people buying defensive stocks, and so it's time to close out the bond trade and now expect interest rates to sort of stay flat for a little while, which now gets me to the second 2 parts of my predictions and to give you updates on those. So the second part of my prediction was I told you that FANG was going to come back, and FANG represents Facebook, Amazon, Netflix, and Google. And the reason I told you that FANG will come back is because there are always a set of stocks that represent the time that people use as a shortcut to get into the market. And FANG is as good a way as any because they represent companies of the new, growth companies, companies of our time, companies with huge growth profiles ahead of them. And so now FANG hasn't quite taken off yet. However, I believe with the recession scare mostly now behind us, we are going to see some, or at least many of these stocks really start to move up. So I still believe in FANG. And the last thing that I told you in my prediction update was that I believe that Apple was a sell and that you should sell it. And Apple peaked out for over $200 and then went down quite a bit and has rallied up from here on the basis of the fact that some people really think that Apple is going to magically transform itself into a services company. I would tell you that that is very unlikely to happen, and that I still believe that Apple stock should be sold. That Apple is a company that's in decline. It's got enormous competition. It's behind technologically in virtually everything that it does. And this so-called pivot, as they call it, to services is ultimately going to fail because of the fact that it depends on people buying their devices. So if their devices are no good, if their devices are not selling, that means it's a problem for Apple. So I'm still a seller of Apple, and I'm still negative on Apple. So that's my Bold Profits Daily for you this week. Please subscribe, share, and like this video, and I'll have another one for you next week. Until then, this is Paul saying bye.